Hi everyone. Wall Street dropped sharply after yesterday following the release of fresh macro stats. The US stock futures also halted their growth. Asian stock markets were trading mixed. In Japan, stock exchanges incurred losses, while in Australia they climbed. Currently, market tensions are mounting ahead of the Fed meeting. Yesterday, the US unveiled a batch of economic reports, including employment data and the ISM Manufacturing PMI. According to the JOLTs report, the number of job openings unexpectedly increased in September. It means that demand for labor remains strong. So it tempered market expectations that the Fed would dial back its aggressive rate increases. When the labor market slows down, their purchasing power weakens and inflation begins to decrease. However, given the report, the situation is the opposite now. Apart from that, the higher-than-expected ISM Manufacturing Index also indicated that the economy was unaffected by rate hikes. Therefore, the Fed is expected to raise the interest rate by 75 basis points today. After that, the federal funds target range will be 3.75–4%. The US dollar is declining across the board ahead of the Fed meeting. In the Asian session, it slid down to 111.19. Although the US currency is highly likely to rebound amid expectations of another sharp rate hike in December, its rivals are taking advantage of its weakness. The euro is rapidly gaining momentum as the US dollar is unable to advance. What's more, the risk appetite is high again, whereas US treasuries are down. After rising for 3 sessions in a row, the US dollar index entered the downward range of 111.14–111.54. However, the US dollar is sure to win luster with investors after the Fed meeting and Jerome Powell's speech. Traders will be looking for dovish remarks in his speech. The Fed's future plans on key rates will affect all currencies and markets. Depending on the tone of his speech, some currencies will rise while others face bearish pressure. The main question now is when the Fed is likely to take a breather in aggressive tightening. The yen is a good example of how the comments of policymakers impact markets and currency movements. The Ministry of Finance has more than once made verbal interventions. They more or less helped the yen recover. However, the Bank of Japan also undertook currency interventions which had a more long-lasting effect on the yen. These interventions were made against currency speculations. Japanese Finance Minister Shinichi Suzuki warned today that the regulator could intervene in the market once again without any warnings. If the Bank of Japan discloses its intention, it may not bring the desired effect. However, the yen rose mostly today amid the comments of Bank of Japan Governor Haruhiko Kuroda, whose commitment to a dovish stance made the national currency the main outsider. He said that making the bank's yield curve control policy more flexible could be an option in the future, but not now. So the US dollar declined the most versus the yen. The dollar-yen pair advanced to 147.18. The US dollar is likely to get stuck in the downward range until the second half of the US session. After that, its trajectory will mainly depend on Powell's speech and the press conference. Traders priced in the upcoming rate hike a long time ago. For this reason, the pair was trading flat in the sideways range between the support level of 146.98 and the resistance level of 148.38. The Aussie was also able to spread wings. However, its upward movement is likely to be short-lived because the RBA has already raised the key rate by 25 basis points twice. As a result, the divergence in monetary policies of the Fed and the RBA is growing. It's quite bearish for the Australian dollar. The RBA is the first major central bank that slowed down the pace of aggressive tightening. The regulator took a pause to assess the effect of sharp rate hikes on the economy. The cash rate has increased substantially in a short period of time. The full effect of that increase still lies ahead, the RBA noted. Despite all this, the Aussie is still up amid risk appetite, rising oil prices and positive news from China. Beijing may abandon its strict zero policy on stopping the spread of the virus. However, after reaching a high of 0.6456 on November 1, the Aussie is trading at 0.6443. Given the expectations of hawkish remarks and the possible growth of the US dollar, it may resume its fall today or in the short term. Now the Australian American dollar pair is moving in the bullish price channel of 0.6385, 0.6429. The Kiwi is also growing amid the US dollar's retreat. It's trying to break above the resistance level of 0.5900 for the first time since late August. On Wednesday morning, the New Zealand American dollar pair was moving in the range of 0.5835, 0.5885. It may log the biggest intraday gain in a week today. The pair also climbed amid strong economic reports and expectations of more aggressive rate hikes by the local central bank. It has already approached 0.5877. That's all for now. Subscribe to our channel and keep your finger on the pulse. See you!